Welcome to Workplace Logistics Module 5, Paychecks. There are many reasons to choose a job, but one of the biggest reasons people work is to earn money. So naturally, you may wonder how you will get paid for all of your hard work. When working as a babysitter or mowing lawns, you may be paid in cash at the end of your shift. Or you may also get a check that you need to deposit or cash at your local bank. Larger companies will have more official pay procedures. For example, clocking in is a way to accurately and automatically track hours for many companies. You may also have a system where you report hours worked by putting them into a sheet or a computer system. Make sure to input your hours before the deadline or you will not be paid. If you are paid hourly, these clocked hours will be multiplied by your hourly wage. This will give you your gross pay for the day. Pay periods differ, but they define how often you receive payment. For example, let's say you work part-time and are paid $15 an hour and you worked 10 hours during the pay period. Once you input your hours, your boss will multiply 10 hours by $15 and get $150. This means your gross pay would be $150 for the pay cycle. Remember, your actual paycheck will be less because taxes will be removed before you receive your pay. Pay cycles are the schedule of when you are paid. Generally, you will be paid 1 week after you have inputted hours. Some of the most common pay cycles are weekly, you will be paid every week on a Friday. Bi-weekly, you will be paid every other week, usually on a Friday. Semi-monthly, you will be paid twice a month, usually around the 15th and 30th or 31st of the month. And monthly, you will be paid once at the end of the month, usually on the 30th or 31st. If you are salaried, you may still have to track hours for client billing purposes or internal metrics. But many companies do not require salaried people to track their hours. Let's look at an example. Say you are paid $48,000 per year and are paid on a monthly pay cycle. You would divide $48,000 by 12 and get $4,000. So, your gross pay each month would be $4,000. Now, what happens once those hours are submitted? First, your manager will need to approve your hours, and then they are submitted to payroll to calculate your gross pay and any tax and benefits deductions. Before you receive your payment, there is generally a week for these approvals, payroll calculations, and funds transfer. You can usually decide how you receive your pay during the onboarding process. Most places give you a check or sign up for a direct deposit. Direct deposit will place your paycheck directly into a chosen bank account. Alternatively, you may also be able to be paid into a bank card. These work much like Visa gift cards and allow employers to load money onto a card that you can use like a debit card to either withdraw cash or buy with directly. This is great if you do not have a bank account and don't want the hassle of a physical check, but there are usually much higher fees when using these cards. No matter how you receive your pay, it is essential to note that you will not receive your gross income. Taxes, retirement savings, benefit deductions, and more may be taken out automatically before you receive your check. In conclusion, learn your pay schedule so you know when to input your hours on time. Gross pay is what's earned before deductions. You'll receive the net pay, which is the total after deductions. And you can receive your pay as direct deposit or by check.